Greetings and welcome to episode 22 of the BIG5D podcast. We're all about exploring the Africa, Middle East, local, and small business tech ecosystem by talking to the people who are building it. The BIG5D podcast is produced by Big5 Digital, and I'm your host, Charles Laughlin. So today's episode is sponsored by Matchcraft, a global MarTech firm powering local search, social, and display campaigns for partners on 6 continents. Matchcraft's newest offering is Powered By, an API solution giving third-party platforms access to the technology behind its flagship Advantage platform. Visit them at matchcraft.com. Today's guest is Deepankar Rustagi, CEO of Omnibiz, a Nigerian B2B startup focused on making life easier for small retailers in the fast-moving consumer goods space. Through his app, a small business retailer can order new stock and have it delivered immediately, rather than waiting days or weeks or having to close up shop to go hunt for new stock. His solution involves all 3 legs of the stool: the manufacturers, the retailers, most of them female-owned and grossing less than $1,000 a month, and drivers. Omnibus recently raised $3 million, bringing its fundraising total to $4 million since it formed in 2020. Deepankar says the company may need to raise as much as $50 million to fulfill all of its ambitions, which include geographic expansion. So let's let Deepankar explain the rest of his business and his outlook for Africa tech. We hope you enjoy it. Welcome to the podcast.
Thanks a lot, Charles.
Great to see you again. For the sake of our audience, why don't you, before we talk about Omnibiz, which is a business that's gotten some coverage lately, raised some money, and we want to get into that. But let's talk about kind of your business background, just sort of the brief 1 or 2 minute version of what led you up to this point.
Sure. So I'm an Indian by origin, qualified engineer, have been based in Nigeria, West Africa for the last 23 years. Did my first startup in 2011. It was called WeConnect. And I think that's how we met, Charles. Mm-hmm. And that was around local search, enabling small businesses to get identified and helping them make more business or grow their businesses online. And post that, I've started Omnibus, which is again around small businesses, helping retailers in the FMCG segment scale their businesses, solve their problems, and compete with the larger modern trade. So
okay,
that's about it.
Okay, so one quick question I'm always interested in. What originally brought you to Nigeria?
Originally, I came in with my family. My dad used to work here,
okay,
in textile. And after that, I left for my engineering, finished that, worked with software consulting for 3 years in Bangalore, and then got an opportunity to work in FMCG. FMCG is very exciting because it's dynamic and fast moving. So took that opportunity and came back to Lagos.
So for those who don't know, FMCG is fast-moving consumer goods.
Consumer goods, absolutely.
Yeah, I always have to define the acronyms, right? Okay,
absolutely.
So So you've, Omnibiz, I want to get into this in some detail because I've seen a few businesses are kind of similar to this pop up around Africa, and it seems to be an interesting area because there's so many of these small business, very small businesses in many cases, handling these goods, and there's a lot of friction in that sort of business model, and that technology is coming in to solve a lot of those friction points. Talk about why you identified this market, kind of maybe share some numbers about what told you this was a good opportunity.
It's a large market. In Nigeria alone, there are a little more than 1 million retailers. It's a very significant portion of the market. That means 96% of the overall food consumption or household food and beverage consumption happens through this chain. 96 is great, is a very large portion. In other countries, this is divided between the traditional trade and modern trade resides anywhere between 50 to 60% in more developed countries. So this problems that the traditional trade faces in this market are significant. If you solve part of the problem, you're making a significant change which will impact the economy directly. So when we shut down WeConnect, we interacted with a couple of FMCG companies because that's where I worked in Nigeria before WeConnect. And we started consulting. A couple of us started working with them, consulting with them. And that's how we moved ahead. When we consulted for them, we found out where the problems are, what are the challenges, and the international Salesforce automation softwares, global softwares that people were using were expensive and were not solving the real problem.
So when you
And
say you
that's
were
how Omnibus
consulting,
happened.
I'm sorry. When you say you were consulting, who were you consulting with? The manufacturers, the distributors? Who are you? All the above?
Consulting for the manufacturers. So we were working with the manufacturers, but the idea they had was to dip down. So their sales team gives them a perspective of what's not working, but not why it's not working. So
Okay.
idea was we want to find out why it's not working, and is there a way, a technology solution that can help us scale the retailers or the redistribution.
Okay. So talk about a few of you mentioned some problems. Now we're talking about the million retailers. Generally, these are very small shops, right? For the most part. Or is
Yeah,
that?
for most part of it, you're talking about someone doing $1,000 monthly turnover. You're talking about a small kiosk or above, keeping 30 to 50 SKUs. SKUs are stock keeping units. Each item that you find in a retail store is called SKU.
Mm-hmm.
So these are guys basically you just come out of your office or come out of your house and you don't have water or you don't have ketchup or you don't have noodles or you don't have basic essentials in the house, and you just walk to them and
Right.
get it and start rolling.
Okay. And so, what were the pain points that the manufacturers identified that you started to look at solving?
So getting reach for manufacturers in developing markets or in specifically in Nigeria is very expensive. Uh, it's you have minimal data to track your performance. You have to invest in your own direct sales team to manage the distributors, sub distributors, and in certain extents, chains like retail chains or Horeca or supermarkets, modern trade chains. And that is a big investment. Even after that, the numeric distribution, which is in how many outlets of their category is their product available, is still low.
Mm-hmm.
So they didn't have a solution to it. So if you go to South Africa or if you go to another country which has a more established trade, you can actually just tie up with certain channels and your product would be made available. I mean, you have to pay for the availability of the product, but it would be made available.
Mm-hmm.
In this case, even after setting up manufacturing, even after tying up with distributors, the challenges were regularity and availability of the product at shelves.
Okay.
From the manufacturer's perspective.
Okay. And the idea of having a direct sales force to deal with so many very, very small businesses is the idea that they are it's maybe getting a little ahead of it, but are manufacturers looking for a way to reduce the size of that sales force through
Absolutely.
through more efficient processes like you're trying to develop? I mean, talk about so it's a cost efficiency issue for them, right? Among other things.
So more than the cost efficiency issue for the manufacturers, it's not scalable. So
Yeah.
they have hit a upper limit. Some of the best manufacturers have a 50 to 60% numeric distribution. The leading players in those categories, let's say beer, the leading beer would have 60% numeric.
Mm-hmm.
Leading noodles will have 60% numeric. But the follow-on player would be in their 20s, and the follow-on player would be in a single digit.
Mm-hmm.
So in these markets, your numeric distribution typically decides how significant you would be, how big you would be. And
Mm-hmm.
that's their concern, that even after investing the money, even after having a direct sales team, the growth has not shown in terms of what they were expecting.
Okay. So talk about how your solution works and what it does and how it solves these problems.
So we work with multiple stakeholders in the industry. Primary stakeholders is manufacturers. We work with them. We get a commitment on consistency of the products. We work with distributors who currently work with the manufacturers, but they do multiple things, which is arranging for working capital, arranging for warehouses, arranging for logistics and manpower to do all this.
Mm-hmm.
So in our model, distributors only do warehousing and manpower arrangement. We do the working capital arrangement. So we provide the goods based on our understanding of that area. and orders that we get. So we have a predictive logic, which we tell them, these are the products in this quantities you have to keep in the warehouse.
Mm-hmm.
We have gone on the field and recruited retailers, trained them how to use the application. Those retailers, when they need at any point in time, whether it's night, day, whenever they need certain products to refill their shelves, they place the order to us. These orders are routed to the nearest hubs who have the stock, which are owned by distributors. And then we have partnered third-party logistics on our platform who pick from that hub and distribute to the retailer digitally and get a electronic proof of delivery.
Okay, so in my understanding of from the retailer's perspective, one of the challenges previously, before having an application like this, is that they would often have to close up shop and run out and restock, and then come back and reopen. So they would lose trade while they're once they run out of whatever it is, beer, ketchup, whatever it is.
Absolutely.
And then, so what you're solving a clear pain point for them, while allowing them to continue trading while they restock their inventory. So that's obviously...
So we effectively increase their productive hours. They don't have to shut down their stores. They don't have to order. So previously they used to wait till the time all the SKUs or all the products on the shelves don't finish. They wouldn't go for part order. Now they can order whatever has finished. There is a minimum order quantity, but they can order whatever has finished. So they can order multiple times in a week rather than once in 2 weeks.
Oh, right. So instead of waiting until you do a bulk order you could be without a certain popular item for days, potentially, which affects your trade as well. Yeah. What do you provide to the, in terms of like financial support or other things to the retailer, if any?
So in terms of financial support, at the moment, we don't provide, we currently cash on delivery or transfer on delivery.
There's no credit component to this.
So we don't have credit component now. We are launching a credit component. It's specifically for retailers who are regularly buying on our platform because we have a good idea of their purchase trends.
Yeah.
So we have vetted them, verified them, and now we are offering them a credit component, which is credit for product purchase.
Right. So, yeah, that's an important point because platforms like yours, you're seeing what their orders are. You know what kind of money is flowing through their business. You probably know what their payment history is, and then you can probably make as good a judgment on a sort of a microcredit decision as anyone. Yeah.
Absolutely. I think that's a very important part of the game. That's why you see recently there have been great number of investments in this industry, in this area, in the African space, everywhere in Egypt, whether you talk about Kenya, East Africa, right, West Africa, or you go outside Indonesia, Pakistan, India, right, all of them have had great number of investment. And retail lending is a big space for future of the digital banks or future of trade growth.
Right. So, and I would imagine you probably think it's a pretty important piece for you to have. You're obviously launching that. So what is, so you have the retail piece, you have the app that they use to order. Right now it's COD, but eventually there'll be some credit to eligible businesses. You have a rider component or delivery component to it. So you're pretty much you're kind of a full stack, or I don't know if that's the right way to put it, but you have the full ecosystem. So talk about the delivery piece. So you basically run a gig platform for delivery, or talk about that piece a little bit.
Right. So we found out with experience that with the growth of Jumia, Konga, and various other e-commerce companies, there are small-scale logistics companies that have emerged who manage between 20 to 50 vehicles. And instead of going into logistics on our own, because that's a very tough part of this business, getting logistics right is challenging. And this is one part where you scale and you spend more. So someone who has 500 vehicles is going to be spending more than someone who has 50, and similarly more than someone who has 5. So we said we're going to aggregate them with technology. So we onboarded these third-party logistics providers. We trained their drivers as well as their fleet managers in terms of how to track, how to see the earnings, and how to start and stop the trips. That's what we have done. Once they start their day, they receive trip details. and they have to accept the details and go to the nearest hub. Once they have picked, their working hours start counting. The more the number of deliveries they make, successful deliveries, the more they earn. So you can call it a little bit like Uber, but just B2B, where people can earn more, and everyone who has a vehicle can come and join and start deliveries.
So you have individuals with a motorbike in the network as well as third-party you have companies that aggregate these riders for you, or is it a combination of aggregators and individuals?
So it's mostly vans, small-scale vans,
Yeah.
the one-ton vans, but
motorbike. Yeah.
mostly aggregated by companies.
Yeah,
So
yeah.
we have a couple of guys who are individual and who have scaled to buying the second van and the third van, but mostly we prefer people who have 10 vans plus. So it's easier for them to manage their operations, and we are even supporting them in getting loans from the financial institutions to scale their business.
Okay. So you mentioned a minute ago that companies are getting funded to do this. I've noticed one it was in East Africa, I think it's Market Force, I think it's called, and they raised some money, and part of the raise was to expand into Nigeria, and then there's, I think, is it Trade Depot? I often get these names wrong. So there are many. Talk about the competitive environment. Usually there's enough available market to draw in and support a few competitors, at least for a while. But talk about the field, how you see it, and how you see yourself as different from your competitors, and that sort of thing.
Yeah, so I think one of the key differences is we started with technology first component. We were not focused on accruing assets. We were more focused on finding partners who could do it. So when you said you are a 360-degree gig in terms of doing logistics, doing warehousing, practically we don't do any of the logistics or the warehousing. We get it done. So
right.
Most of the other companies are doing it, doing the warehousing or the logistics piece, or some of them doing both of them on their own. Our differentiation is that we do not get into doing it on our own. Number two is this helps us in scaling efficiently. Second key difference is the number of SKUs that we offer. So if you see, the long-term problem that we are solving is really the retailer's problem, and we are focused on the retailer. So the number of SKUs that we offer on our platform is aimed to complete the variety that a retailer buys, so he doesn't have to go anywhere else to buy. And lastly, I think we're going to offer a couple of other tools other than lending to the retailers, like a retailer CRM, so he or she can manage their business. Rather, more she's 76-78% of the retail ecosystem in Nigeria is driven by females. So we want them to be able to manage their stock, their stores, and their business in a much more efficient
So
way.
even all their financial records and all the so almost like almost having a zero functionality built in a CRM. Well, CRM is different from accounting, but like that whole full stack business management application. Yeah.
Yes. So I wouldn't call it a ERP because it's small, but it's currently we already have their stock because they're buying from us.
Yeah.
So we are enabling them to sell, so they can actually take out a small profit and loss account statement and know every day what was sold, how much money was effectively made, and what needs to be replenished. A little bit about that. So we're not going into salaries. We're not getting into other parts of the component yet.
No payroll, for example. Yeah.
No payroll for it.
Okay. What about, actually, there's a slight aside, but I've been writing a lot about different payments solutions around buy now, pay later, and then earned wage access and things like that. Have you looked at those types of applications and thought about ways to integrate those into what you're doing?
Yeah, so we are speaking to a couple of players in terms of offering loans, in terms of invoice financing, in terms of other tools to enable the vendors, retailers to scale. We haven't closed any partnership yet, but hopefully soon you should see some partnerships around lending on our platform as well.
Okay. Now, you said something a moment ago that's interesting, which is that I think you said 76% of the retailers are women. Didn't know that. That's very interesting. What do you kind of see often I talk to companies and they have sort of a social impact angle to what they're doing. They're trying to further a social goal, make money in the process. Don't be mistaken, but do you have that thought in terms of helping retailers in some way? Expand their businesses, make their businesses larger. Do you have a vision there?
A very, very clear vision there. So, you know, overall, there are like 25 to 30 million households in Nigeria. And we mentioned 1 million retailers. So these are approximately 5 million, people directly getting impacted. So it's one household in Nigeria is supposed to have like 5 to 6 people based on their census. So 5 to 6 million people are directly getting impacted if the retail business runs well. And it's normally run by the lady of the house. So we see her making much more contribution, the family getting more independent and having scalability means better standard of living and more liquidity. So we feel us making an impact will improve their standard of living and will give the lady of the house more independence and skills or tools to scale up. We believe this will really impact the economy in a big way.
Okay, great. Now, what are your? You've mentioned some products you want to add, the CRM, the financial piece. What other ambitions do you have? For example, Nigeria is such a big country, at least in terms of population, that it takes a while to fully develop that opportunity. But I mean, what's Omnibusiness international ambitions, for example?
We're looking for partners in expanding into other geographies. We believe this business is pretty local. Even though we are technology driven, Africa is not a country, it's a continent, and
Right.
countries here are pretty diverse. So going into East Africa or going into Egypt or South Africa or even in Ghana and Ivory Coast, we prefer to move in with partners, and we'll be rolling out our partnership modules soon. So we are onboarding partners who have done the logistics or understand the logistics bit, understand the warehousing bit in these countries, and would be willing to be our core partner in that country to drive it. We are going to expand very soon into other West African markets. That's our stage one. And we would want to be the leaders in the West African space prior to us moving into other markets in Africa.
Okay, so when you say a local partner, what would a local partner look like? Would it be a company that does? I mean, what's a logical local partner look like?
So a logical local partner is someone who has experience of of working with logistics companies or working with warehousing companies, who has connection with manufacturers in that region. Okay. So that's what a partner looks like. A lot of companies look at getting a country head and then starting up. We feel that's also a very interesting approach. We feel there are companies who are into the traditional trade model and are looking at digitization partners. So if there is someone with the right mindset we meet, we would be happy to be the digitization partner, and they could be the operation partner for that country.
Okay. Okay. So rather than just plan to build a team, you're looking to, yeah, okay. That's fair. Okay. So I want to sort of broaden the conversation for a few minutes. Now, Africa gets a lot of attention because there's a lot of investment coming in for various different things. But you just raised $3 million. How would you describe that experience in terms of what were the challenges? What if any, reservations did you have to overcome? That sort of the unique challenges of raising money for an African business. I don't know if you have any thoughts on that.
I think lots and lots of capital now is available for African businesses, especially after the pandemic. A lot of, I think across globally, there is a lot of capital available. Yeah, so raising has become substantially easier. In the African context, there is the challenge of trust. A lot of investors who are open to investing in your company are looking at someone to make the first move. And once you have that one person who has made the first move, they try and gauge their belief or their understanding of the business, and then they bet on the other investors. So I think that's how I have seen those movements, or some of other friends who raised capital in the recent 6 months have seen this trend more. Um, Other challenges we face is there are a lot of seed investors available who can cut you a check between 25,000 to 200, $300,000, but there are less number of Series A investors available. But I think Series A and Series B investors are making their ways. I'm sure you heard the news of SoftBank investing in.
Just saw it today. Yeah.
Yeah, yeah. So there are some great investors making interesting moves in investing in Africa. I think we
Just for
need
our
to find
listeners,
the
the
right
reference
partners.
there was SoftBank investing in OPE, right? So,
Yeah,
didn't finish that thought. I'm sorry. Carry on.
yeah. So that's exactly. I think a lot of international money is finding its way into Africa. So you need to be vocal. You need to be loud about your storytelling, and if you build the right connections, you can attract great capital.
Okay. So, your current raise, you've got, like you say, you've got a very scalable model in the sense that you don't build everything. You build software and you connect things into it, right? So, that's much easier to scale that model. But still, businesses take a lot of capital. When do you? It's probably hard to ask how much money do you going to need to raise to fulfill your vision, but how soon will you have to go back, and what are the things that are going to be the most expensive part of scaling your business?
So we will be back in the market soon, not because we'll be out of money, but mostly because I think our growth rate is great, and we need to continue growing at the 40-45% month on month.
Hmm.
That's what we aspire to do. For that, we will need to expand both vertically in each country as well as horizontally in some of the other geographies for which we will be raising money. So our seed round was more of a reality check that yes, people believe in us. Our Series A will be out in the market soon.
Hmm.
In terms of how much money we would need to raise in the long term, um, I see us raising between $30 to $50 million in the short long term
That's what, a
to
couple of
create a
years within the next
significantly
couple.
large.
When you say
Yeah, so
short, long term,
in the
next
next
couple of
three
years.
years,
Okay. Okay. Yeah.
yeah, 2 to 3 years.
Hmm.
Uh, the objective behind that is in this model, it's you can't have 50 players in each market. There will be consolidations, or there will be scaling up will be much faster. This is not a model that has not existed like the Ubers or the Airbnb. This is a model that has existed. This is basically digitization of the existing model. So things are going to be very different 2 years down the line in this market. So it's
Hmm.
not a 10-year shift model.
So when you say that you need the capital because of you need to be in a position to be a consolidator. Is that part of what you're saying?
Uh, so you need to be in a position to be able to continuously acquire in the new territories. So when we raised, we were in 2 cities. As we speak, we are in 6 cities in Nigeria. I mentioned to you, we are working towards expansion in West Africa
Hmm.
already. So going into a new market, you have to plow the land, you have to invest in building the team as well as onboarding the retailers from scratch.
Hmm.
Um, I think that requires investment. It also requires investment to build the products that we're talking about to do the lending. So there is a significant requirement of capital, but yeah, in this model, there is an immediate return on it. So it's not a B2C model in terms of e-commerce where hundreds of millions of dollars have been invested and the volume jumps have not come in
Right.
uh, because that trend didn't exist. Here, we are basically saying what you buy from a more inconvenient channel, distributed channel, fragmented channel. If that can be simplified and executed right at your doorstep, would you be interested?
Yeah.
And majority of the places, if the service is quality and consistent, we've got a positive response.
Yeah. Leads to a question I probably should have asked earlier, which is how do you acquire your merchants?
So we have a field team called field agents, where agents can register on our platform,
Hmm.
and then they are trained on how to scout for the right retailers, who are the retailers who can be on the platform, and then they go and onboard those retailers. Once the retailer places the first order, that's when they get um, the incentive for bringing that retailer on board.
Is that an independent, is that an independent channel or is that a owned channel? Are they employees or are they? Uh,
It's no, they're not employees. It's an independent channel. Most of them have they work with other companies as well.
okay.
So if they don't, they're not exclusive to our channel.
Okay. Okay.
But
That
there are
makes sense.
some people who do it full time.
All right. Well, look, it's been good catching up with you and finding out about your business, and we wish you the best of luck. It feels like you're with 45% growth. What monthly growth rate is that? What you said?
Yes,
That's.
that
I
is.
mean, that's what you. I guess that's kind of what you need when you're in a fast-growing business. But that's a very impressive accomplishment, and we wish you success keeping up with it. And we'll keep an eye on your expansion.
Thank you. Thanks a lot, Charles. Look forward to connecting again and
Yes,
discussing more about it.
absolutely. All right. Thank you very much for your time.